Officially, good morning. Welcome to the Market Watch Group Monday Market Kickoff. My name is Scott. I'll be your host. We have an amazing group here ready to discuss these conditions that we have. Keep in mind, as always, our service is for education illustrative purposes only. Nothing's intended to be a recommendation to buy or sell any financial security or product because we're not brokers, we're not advisors. We're just the best friend trading club. That's all we are. That's all. Breaking some relationships along the way is definitely a concern, or creating, or being the catalyst that accelerates America excluded trade deals, right? Where they start trading around us. Like, I don't know. Like, I feel like if we come away from this with more manufacturing jobs, but let's say that over the next 10 years, we drop from a 27% of the world GDP to 20% because this slows us down and accelerates others. I mean, I don't know. Like, I feel like there's just risks that we can't even see to this yet. Like, I don't know. Unintended consequences. I heard a rumor, and this is a rumor, that they were still, and don't get me wrong, I'm not judging this. They said that they were still consulting with ChatGPT about the formula to use, like maybe not minutes, but hours before the press conference back on Liberation Day. Got my days confused. And you guys know I'm a constant communicator with ChatGPT, but I don't know. What are we doing today? Futures, economic calendar, posture, check. No. Oh, yeah, check into the posture. Posture, if you didn't see it yesterday, it's a record. We are just shy of our 2-year anniversary as this group, and this is the lowest posture we ever had. It was also the biggest 1-week drop, indicative of the nastiness that last week brought. And even now, as we open down 2%, we are just a fraction away from this thing. In fact, you'll see it now. The things that we've been talking about, you'll see it in the news where they're starting to say this may be the fastest bear market ever. Okay, let's get to it. Let's start with the posture. If you didn't see it before this market opens, this is where we are. A bunch of people popping in. If you're just getting in here, welcome. Good to see you. Does ChatGPT help me in my trading? No, not. I mean, yes, in like as I ask it questions, but where people are trying to apply it, Sam, that's such a great question. Where they're trying to apply it is in timing, and some people, don't get me wrong, some people love it. Right? Some people love some of the charts that they say are like AI driven. It's not. Those are just different technical indicators, right? Like, AI can't predict the future as much as people like. I mean, it can, because if it did, then everybody could turn AI on, and then as soon as everybody was using AI, then it wouldn't work anymore, right? Like, theoretically, because then it's just AI competing against itself, and then it's changed the dynamic of market competitors, and then it's no. I think what it's going to help you do is accelerate your learning curve. I mean, little questions that you would just like, I don't know what this means. Boom, you put it in ChatGPT, you understand it, it helps you apply it. So, it's got a great ability to just sort of help in the journey because it's just a better search engine. It's better organized. It communicates information faster and better organized. I think you should use it as a tool. But is it going to make you a better trader by making your entries and exits better? Because it's like, we want to, this is what, and you'll see it. I see it in marketing as I look at new trading services. I've been in this, I've been in this industry for a very, very long time now. And I've seen a lot of new services come and go, and you find that they're very good at marketing and not as good at trading. They'll sing you a story about how great the AI will predict it, but once you turn it on, you'll find that, like everything else, past results are not indicative of future performance, and you're just back into the jungle. So I don't know. Maybe someone finds it and puts it together. I'm skeptical because maybe it can process data faster than us, but there's already quant trading models that exist that are so fast. They're moving faster than you and I could even understand the information. They literally set up their business structures along telecommunication lines outside of market centers, the exchanges, so that they're little things like that we're just never going to compete with. We can't compete with that kind of arbitrage level stuff. That's maybe where AI would work, but that's already beyond our reach anyways. So start your sentence with one sentence or paragraph. Agreed. That's funny. Okay, what happened? Long term dropped 0.5 point. Short term dropped 0.75 point. VIX dropped an entire point. Sector rotation 1/4. Major market 1/4. The only thing that didn't get worse was volume. It was the only thing. Everything got worse. Huge drop. Yeah, right now, what am I thinking? I'm thinking, and then you watch, then after we score this, we watch the futures open, and they're down 5%. And then we come this morning, and they are, let's check out on it. 1 minute before the open. 2.5, 2.75, 3.5. The good news is that it definitely got oil cheaper. But when oil gets cheaper based on an expectation of overall drop in global demand of everything, then you're not as excited about oil being cheaper. Okay, so what do we know? If you look, this guy, he just seems a little confused. I think this guy down here, that's our guy. He's got the right look. Although as I look now, I almost think I see a little smile cracking. Maybe he's laughing at a joke, actually. Okay, what's on the docket? We know, the volume was enormous on Friday. It was interesting. So it's a funny thing. Sam's calling out the volume, and that was one where after I scored it, I was like, I probably should have actually given Thursday and Friday heavier weight than I did Monday and Tuesday. I was like 2 days up, above average up, 2 days above average down. That's normally what we're going to do. But to Sam's point, let me get to the SPY and we'll watch this thing as it's opened now. There we are. Oh, we crossed it. That's our line, you guys. This is it. We're bear market on SPY. Let me weight this heavier. Edit it. And let's make it 3 and let's turn it red because we just went. That's our bear market territory from here. Right? From 613.23 as a high. This red mark here is 20%. So you can see we fell pretty hard. We got down. And that was pretty fast. That was a consolidation. Our posture dropped down right near a neutral score. Around a 0 or so. But as last week happened, it obviously kicked us into straight immediate bear territory. Now, the problem is, are you thinking, then are we putting bearish trades on now at the bottom of these 3 days? No. In fact, we were taking trades off. I was hitting targets with puts here I don't know, were you expecting it to drop 20% that fast? Because I wasn't. I don't know where that would come from, since this is the fastest first time this has ever happened, right? And so that's what I tell people a lot. I'm learning with you. 5 years ago, I traded in the first pandemic that I've ever traded in. And then I traded in the first post-pandemic recovery and the first global supply chain disruption. I've seen a lot of new things recently. This is new to me. I'm not quite sure what to expect here or what's next. I do know I'm not going to chase this thing down. What did we say about trades? Intraday. That's where your momentum is. Trying to find swing trades in this, trying to hold something overnight, you're not going to like how this thing moves with the gaps up or down. Imagine if, because look, there's plenty of times where people will like buy this low. They're thinking, oh, it's going to recover. And inevitably, you'll see some big recoveries like that. Like something like back here. And it's like boom, boom. Nope, we didn't get the boom, boom. We didn't get 2 days up to start maybe a flag type pattern. Just further down. But can we chase that down? No. If we see a recovery and it moves up and then it starts to falter and roll over, that dead cat bounce type of a move, that's what we start to think, there's my next swing bear swing opportunity, where I'm looking to enter bearish trades and hold it for a while and think it's going to collapse again. Right now, it's a tough trade to try to trade a further collapse. This thing could rocket back up, right? When it's this much, we could get back 4 or 5% in a heartbeat. So if you get puts and then you end up on the wrong side of one of those, big days the opposite way, you could lose trades, 4 or 5% moves like that. Like right now, we're down 3.5, right? Those will wipe trades out. If you carry trades overnight and then you end up on the wrong side of one of these big moves, it will wipe out whatever you have. So those are the risks. In fact, if you look at yesterday's news recap from Sunday, it's the first time I didn't put out a watch list. I said I'm not going to put a watch list out because this is not the market that you're looking to try to jump into something here. Which is fine. Right? And honestly, we've been assessing the market this way since back in this area when we're like, hey, our posture is not great. What are you doing? Well, not much, first of all. Not much. If I do something, I'm going to be, did I try a couple of bull trades? Yeah, and not on this one. Here. We went up, we pulled back, and then we started to move again. That's a shift. Yeah, I put a bull trade or two on. One of them worked out fine. Didn't move great, but it moved. The other one stopped out pretty quick. No harm, no foul. Small loss, move on. Then the puts came like magic, and it made a difference. It's like those puts, March was profitable. Well, great. Now what? Whew. Here we are, finding our now what. Let's just look at the opening range for a second. It's pretty nasty. It's really nasty. Okay. Is anyone holding anything right now? Yeah, this day could definitely end up, in a lot of different places. If it breaks back above this line, I might look for some intraday bullish things to catch momentum if it starts to try to fill things. Make sure you have what you're looking for, and this is what we talked about. We've never done. I haven't yet to do a day trade, intraday trade alert. But yesterday I said, my thoughts are something like a momentum trade that sets up in the morning that we can put on, and then you'd be in and out the same day. 15 or 30 minute chart. So maybe like a 2 hour holding, 2-3 hours where you're just trying to catch it. If it's wrong that day. I put that out there and people said, yeah, that sounds kind of interesting. So great. Be water, my friends. I've never done an intraday alert before because that's not typically what we do. But along the last couple of years, people would ask, Do you ever day trade and when? Now, Glenn day trades more frequently than I do, more regularly than I do. But I said, of course I will. It's just when the market's right, when swing trading is harder, day trading becomes our viable alternative. This is the first time we've really seen that condition. Back in October of 23, we said, and a few of you were here with me then, we said, we're close to that. We're close to that. We started to do a little bit. We did a couple bearish trades. We did some. But right now in this market, what am I willing to do? I'm willing to take a nice bear setup after a failed attempt of buyers. We're nowhere near that. We haven't sniffed a buyer for. Would Glenn run some sessions on day trading? Well, like Friday's a great day to bring that up with him in the morning, because it's like that's typically when you would kind of orient yourself for a day trading session is in the morning. So on Friday morning he could talk about that and then look for setups. I think he'd be willing to do that if you asked. I don't know if he day trades in the last hour of the session or not, but on Wednesdays you got an hour with him in market hours. I'd ask. I thought it was back to 2.5% at one point, and I'm like, oh, maybe it's not that bad, but here we are, down 4% and falling in our new bear market. So, okay. What else? Let's see the whole watch list. Let's look at the carnage. Good. I'm glad that you guys are open to that. That's definitely what I would be looking at. Is that type of a trade. We'll see this week if we can get one or two of those up and running. But yeah, what do you notice? A lot of our talk is about is the adjustments. That's always been, which is why I feel like we got out of this thing sidelined and just kind of into a little bit of what I would maybe call sniper trading, right? Really patient, really picking your marks and waiting, and and then man, we're not looking to have a bunch on. You're just sniping a trade here or there, keeping your eyes open, keeping your capital, safe, protect the king. Carnage is the word, right? I mean, it's nasty. We haven't even got. I'm a little nervous to go into the watch list. Let me see. First question: is there anything green on my entire watch list? Yes. By 1 penny, the bullish dollar, which is just in a horrible, horrible place, but a little recovery there. And the VIX, which touched 60 this morning. Yeah, like we are having to go back to the pandemic. 5+ years to find this VIX. I'm going to take it to 10 years. And the weekly go. Now, remember, and I get to because I'm the one drawing, I'm going to discount the Great Pearl Clutch of 2024. What a sad and pathetic display it was. So I'm gonna erase it. You guys didn't know I had. Look at that. You guys see that line disappearing? My magic. Huh? Oh. Okay. Oh no! It came back. Don't come back. I think I'm so clever. Highlighter, vanishing pen. Okay, hold on. There we go. Get rid of this. Get rid of this Pearl Clutch line. Nobody wants this. I keep messing myself up. What is going on? Come on, Scott. There, that's better. Okay. All right. We got rid of that line. And you can see here is Steven. I hope everything's going well at the doctor. You're committed. Look at that. That's a level that we're like, that was the level. And then we had this was the secondary level. And we're like, maybe that's it. No. Like, other than the discounted pearl clutch, this is kind of nasty. Is there opportunity in something like this top? Yeah, there is. You're going to have a hard time catching it on anything but an intraday chart. There's definitely opportunity. So if you're going to be able to intraday trade, you can. Oh, I just erased my whole thing. Go back. Let me only erase you guys. I don't need you. Okay. What we would be looking for coming out of this to possibly run a bull trade would be if this thing drops, shoots back up, but doesn't get back to 60 and then drops again. That right there, I would actually think, okay, now I can, remember we said we're looking for marks. What are the marks that might change how we see things? That's a mark. That mark would be like, yeah, I'll put something, even if it's just bullish on the SPY to see if it's going to catch a big run where it's gets back a big chunk. And then it settles back into this old range, and then you're like, oh, okay. That's ideal. If this is what happens, I'd be happy about that. I don't want to see an extended bear market now that we're in a bear market. What are my thoughts? If you look back, we looked at bear market of 2002, that dropped 55%. We looked at a bear market in 2008, that dropped 65%. We looked at a bear market in 2022, it dropped 27%. I'm leaning to 2022 because we have the same labor market. Everything's pretty good there still, and that's our buoy. That's what's holding us up to some extent. If we start to see that slip, then I start to get more nervous about an extended bear and that deeper bear. But right now, I would say closer to, we actually had a bear market in 2020. It was a 6-week bear. That was the fastest bear market. And then it recovered and became a bull market like 9 weeks later. So this is like a crazy situation that I'm not expecting to see that either. That market was about 36%. So, that's what's in front of us. So yeah, intraday, looking for a possible bear flag for increased bearishness, looking for a VIX lower high to potentially do an extended bull trade. Other than that, cash is a position. Let's go through the whole watch list though, just to kind of see the way it all looks right now. Let me start at the beginning. Oh God, look at these. I mean, it's going to be very similar where it's just you have these 3 really ultra nasty days that, I mean, what are you going to do with this? You want to guess at it? You want to just think, oh, I'm going to call the bottom here. Okay, good luck. What's different about today versus yesterday versus the previous day? They all looked about the same at that time, and then all of a sudden, boom, it's lower, and then boom, it's lower. 3 days down, 3 days down. I mean, yeah, these candles are trying to recover, but it's down. It's at the lows. CME trying to hold the 50. CNP. Okay, look. I mean, look. I would maybe look to put something on like that in the face of the destruction. I would still put one on. I would. Let me know if you would join me. I'm curious who would join me for that. Not necessarily those. You're not committing to that. I'm just saying if we see one of our that hold up and the market seems to find a bottom and things move, things are going to move. We want to be a part of something like that, right? Sandy says no. In that regard, I might pull the trigger on a bull, Sam, on one of those CMPs or CMEs, if the market starts to see recovery and I can jump into something that maintain bullishness, I'm gonna. You guys can avoid it, or not take it for sure. But I'm thinking about it. Tony's will jump. He's like, I'll jump with you. Duke Energy, there's something. Utilities trying to stabilize. I mean, everything got hit, but again, I'm not trying to call the bottom. You know that. I'm saying like if we see it stabilize and start to bounce, then I'll think about it. 3 days down. 3 days down. Isn't that the name of a band? I don't know. 3 doors down. 3 days down. I mean, you can see this. There's nothing different on any of these charts. Gold even is pulled back pretty heavy, but it's still going to be an inflationary based trade. I'll tell you this: there's going to be some. I will, when the inflation trade is over, gold will give this back. And when it does, that I will trade to the downside. I am that's the last time I traded precious metals was a very similar situation, and that's when it got inflated as a defensive mechanism and then gave it all back. That's when I was able to make some good reversion to the mean trades. I'm excited for some recoveries. Me too. I'd like to see some. Where are they? Someone told them to me. All these guys, that were at like the inauguration, I have to wonder to myself, Bezos is, this thing's down 80 on down 30, 33, 35%. Like that's a lot of money to lose. Are you feeling like, what's going on? Hood. I'm just going to crack through these because we really aren't going to find something, but we do need a little bit of time. IBM, terrible. ICE, that was one that was holding up. CME, hold up. This is the difference. Look at CME holding that 50. ICE just cratered through it. Finding some strength. KMB down. Coke. Kroger was one I was thinking about. Let's see. Ooh, maybe still Kroger. Look at Kroger trying to hold up. Just got a new high. You got to be thinking about a stock that just got a new high over the last 2 days when everything else was just getting absolutely bashed in. Held up. MasterCard is down. Meta. All of these are just at these lows. It's just horrifying. Horrible. NI, that was the bull trade that we put on right in this beautiful signal bouncing. And it had a couple of hiccups, but it just did its job and grind. Took some off in here, tightened the stop, popped the rest out. Excellent. There's been a major cyber attack issue where millions has gone missing from super funds. That's in Australia? The super fund is like the 401k equivalent you guys have, and that's like news that's come out. That's terrible. Is it in crypto? How do they do that? That's insane. NVIDIA's new lows, PLTR's new lows. Philip Morris even broke the 50. Anybody have something on their list that they're like, Scott, this is the trade. You're just missing this. Because I'm open to it. I want that stock. Someone give me that. I looked for it and I couldn't find it. Even RTX, man, like that was one that I was like, I wonder if this is going to hold up. Nah, just smashed. Battered. First Solar, Sam says. I'll go look at First Solar. Let me finish this and we'll get down there. And then we'll look at the trading plan. We're working on risk management. Oh, that's convenient. Section 4, the most beautiful thing of all. Risk management. Look at the SPY. There it is, trying to hammer. Let's go look at that opening range. Okay, so the opening range is now, where's my pen? Maybe it'll be today. This looks like it could be actually trying to set up for something here. There's the opening range, there to there. 1, 2, 3, 4 candles. Let's try to break to the upside. Now, you could go right with that. You could go with that. Or if you wait, you might see if it just sort of fizzles, comes back down. I would say that I would look for it to be above the half of the opening range, where on the pullback, if it then turns, that's the next higher low that I would be willing to trade. Yeah. I mean, it hasn't broken yet. There's still 2 minutes left. If that candle falls back down, all bets are off, right? Like, that's the point with intraday trading. You got to wait till the end of the candle to confirm it. Otherwise, you'll take a trade and then last 2 minutes, that candle falls apart. And then you're like, wait, is it still valid? No, it's not. You took an invalid trade. So we got to wait for confirmation on those shorter time signals. But there you go. We'll see what happens. Toast. TPR. All down, down, down. Have to have a day trade strategy is exactly true. Twilio. And let's finish with Walmart. Yeah. I mean, look, we just went through the whole thing. Right now, it's no man's land. There's nothing there for us. Relax. Keep your powder dry. Keep your cash ready. Let's go look at FSLR for Sam. First Solar. I mean, it's churning. It stopped going down. That's what I would say. I kind of see it down here on the bottom. What would I want to see really to feel good about this? Either direction. I'd want to see it break up, pull back, and then that's my bounce. I'll be patient. I'll wait for that for any of these things, right? Like anything that we have now, I need patterns of recovery. I need to be convinced. Otherwise, be convinced on a shorter time frame. It's easier to be convinced. ASTS. Press says, good morning, Press. I didn't even see that you came in. Hope you're having a great morning, my friend. Let me see my annotations. ASTS. Space Mobile. Well, it's almost back to the very, very lows. You know that for me, that's not... I'm not like, oh, it's at the lowest, so I'm going to buy it. I need to see it bounce and then bounce from a higher low. Just like a lot of things, just coming on down and trying to figure out where it's going to find a bottom. Trading plan. Trading plan. Here's the trading plan. We are working on risk management. What are you looking to do? Define your portfolio heat. Define the ranges. Define the levels. So it's not just like, oh, I'm willing to be into up to 15% risk. That's a really overly simple definition of portfolio heat. I would assume 15 is the max, which means if you have the best market you've ever had, like when we're in a high fives or 6, 7, that's our posture, then that's probably where you'll look to be. What if you're not there? What if you're at a 4? What if you're at a 2? What if you're at a 0? What if you're at a minus 2.75? Don't just define like one level. Be thinking about how will my heat fluctuate with market conditions? How can I get as many of my chips on the table as I can during times of my geniusness, my geniusness, which is when, as the saying goes, everybody's a genius in a bull market. That's not what we have now. So we're not expecting to be a genius. We want our portfolio heat to adjust to conditions that we recognize are more likely to be over trading conditions, trades where you're like, oh, I wish I wouldn't have had so many on. Here's a question for the group as you've reflected over the last 3 months and a week of trading in 2025. Is that a mistake that you characterized to yourself in any of your reflecting periods? Over trading. I did one. I had one where I was like, and I had an under trade too. So don't also think, don't just judge one side, but judge the side where you're like, I probably should have had more on. And then, because then you can look back and be like, well, why didn't I? Why did I hesitate rather than, right? Those are questions that I think that as we answer them just kind of keeps us sharp, keeps us thinking. Portfolio heat, then trade risk per trade. My heat level is down right now. My risk per trade is down right now. I'm not going to take a lot of risk on a trade right now. I'm willing to take some risk, a marginal amount of risk. Let's see what happens. Number of trades. How many trades are you willing to be in right now? Because me, not very many. I'm not going to have a lot of active trades going. It's not. Doesn't make sense. How are you going to make adjustments? How do you correlate all of this to market posture? What are your tsunami indicators, and how does that lead to your hedging? And what are the things that you're monitoring that might cause you to take a break? Drawdown, and I'm going to add one to this right now. Horrible market conditions. I mean, at least a minor break, right? What would I say is marginal risk? So if you're like 1 to 2%, you might cut that in half and be like a 0.5 to 1% risk, right? So if you're still at, I would be uncomfortable doing more than 1% risk. Where when I have a better market, I'll definitely kick it up to 1.5 or 2 per trade and really get things rolling. So that's what I would mean there. So like start with what you normally would do. If you're normally at a 2%, I'd probably kick it down to 1 just to start and be like, how does that feel? How does that 1% mark feel versus it's half of what the other one is. So it should ease the trade quite a bit and make it easier to manage. That's what I would start with. Great question. So yeah, great questions. I think we're having great conversation. Like it's not like we have to sit around and fret and bitch and moan, although I will bitch and moan. That's definitely my strategy sometimes. But what we should do is work. Let's work on our trading plans. Let's work on making sure that we adapt quickly and are ready to refine our watch lists when we come out of this. Let's just work through this. I would say, the tone in here is no one loves these conditions. Of course not. But I feel like we're all pretty okay. Good perspective. No one's trading on tilt, if you don't mind me borrowing a poker term, where we're overly emotional and reactive and making mistakes. So yeah, don't freeze in horrible conditions. I agree. And we're adapting. What are we looking for? We're looking for the right things. We know exactly the kinds of trades. There's no like, well, would you do this? I know exactly what I would trade. If we get 2-3 days of upswing and then it starts to fade, I'm going to look for bear trades to the downside. If we start to see some recovery, I'll definitely be considering, is there going to be a V and is there anything that I can catch for 2 or 3 days bullishly? And I'm going to be looking intraday to see if I like the setups to catch something in and out over a few hours. So it's light, it's toes in the water. It's, nothing that's going to put myself at too much risk in any given time. And we'll be fine. We'll come again. At this point, I'll end with this. I always am sad when we end. The market, if someone was just in the market for the last 6 weeks, so that's just back to the end of April, 6 weeks, they're down 20% right now, 20%. From year to date, it's not quite that much because it went up a little bit, but we're probably down 17% from year to date. 17. So if you go look at your year to date and you're down 10, you're ahead of the market. The fact that you were active made you better. If you're down 5, you're significantly ahead of the market. You're actually, I know it's hard to be like, I'm down 5 and I'm pretty happy with that, but I don't know. Shouldn't you be? If you're break even or making money, that is skillful. You can't luck your way into that in these conditions. So whatever got you there, find it, anchor it, love it, embrace it, nurture it, grow it, practice, Kami says, right? Oh, I love paper trading markets like this. I will paper trade the hell out of this thing. I'm like, let's just try it. Let's just learn. Let's test. Let's do some things. So, we don't have to just sit around and then try to. But what people will sometimes do is they'll check out, and then all of a sudden they'll come back in 2 months and they missed 2 amazing windows of trading. And then it's nice and slow again. And this is like, God, if you're going to do that, why do it at all? So anyways, it's good to see everybody. I'll be back tonight. We'll see how this plays out, and let's just chat about it. Let's have questions. Let's talk about day trading and what those setups might look like. Let's see what we can do. So it's great to see everybody. Enjoy the rest of your day. I will see you tonight at 8 p.m. I'll be on for an hour. We'll just Q&A, pull up charts, chit chat, whatever else. As always, happy trading.
Record.